Nvidia has been the absolute killer trade over the last 10 years, 5 years, 3 years, beating everything else in terms of its returns. But the next few years, the best gains are not going to be in Nvidia. Obviously, it's massive now. It's part of the reason. But the true reason is the biggest bottlenecks in AI are no longer Nvidia. It's in all the layers that sit underneath Nvidia and the entire GPU chip builder. In today's show, we're going to go into what these bottlenecks are, where they are, which companies are kind of inside these bottlenecks, and why this is where the smartest money in the world is currently getting positioned. This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, I'm Alessandro. Welcome back to the show. So today we're talking about the AI trade, right? And this website here, just going to quickly show you this. This is basically coin market cap for AI that is inside the GPU build-out, right? You've got loads of different sectors, and we're going to go into some of these sectors in a minute. I just wanted to show you this website. It's basically, as I said, coin market cap for AI, right? And just look at these returns. Over the last month, there's 112 companies here, 30% returns in the last month. In the last 3 months, you've got 82% returns in the last 3 months. In the last 6 months, 150%. In the last year, I think it's something like 400% returns. I mean, this is the coin market cap we've been praying for. Why couldn't coin market cap just look like this? This is the average across the entire book, remember. This isn't just a few tokens, a few companies. This is the average. Has gone down 30%. You've only got 1, 2, 3, 4, 5, 6 losers in 112 companies. And it's all because of this AI capital expenditure, right? And these are the companies that are the receivers of that capital expenditure. And so the entire market has been AI. And so if the entire market has been AI and the earnings that the market's been making, which have been pushing these AI valuations so high, is true, then it stands to reason that the companies that are going to make the most money or be worth the most amount of money or go up the most are the companies where all of these demands on building out more AI get squeezed, right, where these bottlenecks come from. And just so happens you can kind of like create a framework for this, because if the market is AI, then the index going up means the market's going up. But if the market's being dragged up by AI, then AI going up means the market's going to go up. And just this week, we had one of the lowest breadths on all-time highs of all time. What does that mean? It means that a bunch of companies that are in the S&P 500 went down whilst the S&P 500 made new all-time highs. And this is because semiconductors have gone from being worth about 2% of the entire index to 14% of the entire index, which is obviously crazy. I think it was 7% back in 1999. We all know how that ended. And you can't hide from AI, right? In emerging markets, AI is 1/4 of the index. Taiwan Semiconductor, Samsung, SK Hynix. In boring ETFs, AI is the top 5 holdings. You know, in the S&P 500, AI is about 40% of the entire market. So there's no getting away from it. If you hold a diversified portfolio, you hold a very high concentration in AI. Now, that isn't necessarily a problem. We have been through in past shows, I don't know if you've seen the last one, that concentration is not necessarily much of a problem if history is anything to go off. And actually, you want to be concentrated in the winners because the winners tend to win. But one sector continuing to gobble up more and more and more of an entire index does pose some kind of like thoughts for concern. But the point isn't it's good or bad. The point is, it is what it is. The entire market is getting gobbled up by AI. And AI up means market up. AI down means market down. So what's actually pushing the market up, right? What's pushing the market up is earnings. Earnings have continued to increase. And actually, what's happened in the last 6 months, which is pretty crazy, is you've seen earnings in a lot of these companies that sit inside the chip manufacturing stack, earnings have gone up, stock price has gone up. But in real terms, the value of the company's got cheaper because the company is now projected to earn more than they were earning before, and the stock price has not gone up enough to justify those earnings, right? So actually, a lot of these chip manufacturers, their earnings per share have come down while the stock price has gone up enormously. So this is very different to 1999, where you had earnings rising and forward earnings collapsing, right? You had the stock price rising whilst their projected earnings were coming down. Very, very different things. And here's where the entire kind of like process begins to get a little bit terrifying, really, is that the model labs currently lose money. So OpenAI, Anthropic, etc. These companies are subsidizing usage. I use my Claude Max plan, push it to its limits all the time, and it costs me about $200 a month. Now, Claude are probably giving me about $5,000 in compute every single month when I max out those credit limits. That is not sustainable, obviously. Now, of course, we're going to see the cost of compute continue to go down, but the demand for compute is going to continue to go up. So it's hard to see where, other than industrial use, which, that is actually where Anthropic have gained most of their market share from, the average user is unlikely to continue to pay enormous amounts or the true cost of AI. But for now, it doesn't matter, right? For now, it doesn't matter because that money is going into the CapEx receivers. It's this portion of the complex that currently is pulling up the entire market. Money is going from the hyperscalers, Microsoft, Google, Meta, Amazon, Oracle, etc., and it's going into these CapEx receivers. And so it's the CapEx receivers who are benefiting the most. And it's the CapEx receivers who don't need to turn a profit on AI. They just need to produce the GPUs. It's the hyperscalers and it's the model producers who need to turn a profit on the AI eventually. For now, everyone's okay with it. But the issue with these earnings is that they are cyclical by nature, right? Because buyers order quarters in advance, which can create backlogs. Then backlogs build through hoarding and over-ordering and double ordering with multiple suppliers. And then it pulls demand forward, which inflates today's prices. And then it magnifies the drop when that rolls over, right? So again, what's pushing the entire market up right now? It's AI. What's pushing AI up? It's earnings. Earnings are the thing that's actually driving AI to continue up right now. Now, those earnings, especially in those CapEx receivers, could be cyclical, and they have been cyclical in the past. So when that begins to sort of roll over, when those earnings begin to not be met so easily, it's probably going to be a problem. But for now, it seems okay. But this is where we need to sort of like understand a little bit about what's going on, right? Because there's multiple layers to producing a GPU, a fully functioning GPU. And loads of things go into it, not just 6 layers actually. You need rare earth elements as well and a bunch of other stuff. But fundamentally, you've got these 6 key layers and they all build on top of the other one. And this is kind of how it looks in terms of its market cap, right? How it all stacks up. And you can see that some areas are much smaller than other areas. It's not seamless all the way through. There are big companies. So these are the companies, right, in these areas and how much they're valued at. I actually think the HMB one is wrong, actually. This should be about 800 billion. It's a bit annoying that it's not 800 billion. Anyway, imagine that one's about 800 billion. Different levels inside this stack, right? This is all market cap weighted for the companies inside these elements, right? And at the bottom, we've got companies that produce indium phosphide and substrates. And these are companies that basically make the thin wafer, it's called a wafer actually, that GPUs run off. It's the base layer. This base layer then gets sent to Taiwan Semiconductor, and then they basically print data onto it. And so that's why you get Taiwan Semiconductor and ASML, because ASML, the company in Holland, essentially make the only machine that kind of does this in the entire world at the scale and the quality that Nvidia GPUs need. And they sell that to Taiwan Semiconductor. Then on top of that, you've got high memory bandwidth, which is stuff like SK Hynix, right? So they're like adding memory to these things. Once this like flat wafer's been made, then some data's been put on it, then some memory's been added to it, then you need to add photonics to it, and this allows for data to be transferred via lasers or via light, which is completely crazy. And then once you've got each of these GPUs essentially able to communicate with each other via lasers, you then obviously need power and cooling and a grid connection to actually turn all this stuff on. And then you need to whack memory on top of that. So they need to be able to actually save the data. That's where all these sort of stacks come from, right? But you can see some of these areas are much smaller in their market cap than other areas. And it's these choke points that are important to get your head around, because photonics was a choke point, right? It went from 800 billion to 265 billion. I mean, it still is a choke point. It still is relatively small inside this stack. But Nvidia invested directly $4 billion in two companies. And, of course, those companies did phenomenally well afterwards. 166% year to date for Lumentum and basically 100% year to date for Coherent, right? Everyone realized that these guys are essential infrastructure for continuing the AI build out. So the bottleneck for some of these companies is literally the bull case for them. It's capped by physics. There's extremely constrained supply, meeting, what seems like unlimited demand. And as long as their earnings stay strong, they're going to continue to drive strong returns. But it's all driven by earnings, right? If earnings start to roll over, then the receivers, the CapEx receivers, they're going to roll over with those earnings. But not every layer has the same moat, right? Because obviously if a company has a monopoly or maybe even a duopoly over a specific sector or a specific layer in that stack, they're going to have much greater power over that particular sector. And so this is why ASML, the Dutch producer of the machine that allows Taiwan Semiconductor to actually print this data onto the base layer of the GPU, has done so well. Same with Taiwan Semiconductor. No one else in the world can do what they're doing. And so if a company provides physical scarcity, indium phosphide is super rare. It's really hard to get hold of, and actually it hinges largely on China's decision to continue or not continue export controls, which is coming at the end of November. China are going to decide if they're going to continue to implement a export control that has been lifted for the last year. And there's some names in these companies, right? But the framework is to understand that there's real limits into there's physical limits into this AI build-out. And some companies massively benefit from these limitations in physics because essentially they have enormous pricing power. For this trade to keep working right, you have this flow. And this flow comes especially from the hyperscalers. They must keep spending. The bottlenecks obviously must remain bottlenecks, because if suddenly you get a bunch of capacity, then price is going to adjust downwards. People are highly incentivized. Other companies are highly incentivized to go and try and make these products, but they just take so long to come online that for now it looks like these bottlenecks are pretty sorted. And so as long as these companies are able to set the toll, they're going to continue to increase their prices, which means they're going to keep beating earnings, which means considering the market is all AI, or AI is pulling up the entire market, the market is likely to continue to keep progressing upwards as long as these expectations for earnings are still coming through. Now, obviously, there's loads and loads and loads of things that can break the entire chain, but there's loads of things that could break the entire chain. I'm not saying this is number go up tech forever, of course, and it's actually only I'm not saying the number is going to go up everywhere either. It's only a very small section of the overall economy that's doing well, right? You need that demand state. The hyperscalers could decide that they're not going to do so much CapEx anymore. You could get cheaper alternatives could come through. You might have a case where rates rise, right? But in actual fact, I think it's more of an issue if rates fall enormously. That probably is going to be worse than rates rising, because if rates fall enormously, then there's probably going to be recessionary pressures, and no markets tend to do great in recessionary pressures. The market looks unbelievably heated at the moment anyway as well. But from everyone I'm speaking to, people just think that earnings are probably going to be okay for the next 1 or 2 quarters at least. And so as long as these earnings continue to keep beating, it's really, really hard for the market to price in lower, right? Because if the largest players and the players that are driving the biggest returns are beating earnings and they're not trading at enormous multiples, then relatively they are cheap. So the market is always going to consider them cheap and is going to consider keeping that bid going into them. And so super simply, like the market is AI and the earnings are very real for now. And so the tension pulls tightest where physics pulls, which means that as long as the CapEx receivers are continuing to earn from the CapEx spenders, likely continues, and this is why I wanted to show you this essentially coin market cap for AI bottlenecks. It's not to say that you should go and do anything with any of this information and go and buy any of these companies. I'm not saying that at all, of course, because that would be financial advice. You should go, but it gives you an idea of this really is where mind share is at the moment. And it's not really in crypto. I think in crypto you could probably, there's like 5 or 6 tokens with good mind share and deservedly so. And I've covered them, ad nauseum really. I'm actually quite interested to do some deep dives into some AI tokens actually that are sort of like under the radar that I think have a pretty good chance as a sort of like bolt on to this show. But I kind of wanted to get this idea right there first, that there's a lot of bottlenecks sitting quite deep down the AI stack chain that are definitely worth bringing up. And this website's amazing for it, right? Because you can come here and some of these things that I've spoken about, you can go back through this presentation and, pause the video and just see where these bottlenecks are, but then come back to here and get to grips with, so indium phosphide and substrates that they call NP and substrates, which companies are in this field. And this is, because this was such a bottleneck for so long, this is why AXT Inc. has done 8,300% in the last year. It's because it was a bottleneck. Now, these bottlenecks are continuing with lots of different companies. One area I'm particularly interested at the moment is rare earths, right? And the reason I'm particularly interested in rare earths at the moment is because rare earths are very clearly a geopolitical problem right now. Trump obviously has has access to Greenland now. He's been trying to relinquish America's reliance on China to gather a bunch of these natural resources. And for the most part, the US are still highly reliant on China. Who's to say which one of these companies is going to win? Just want to bring it to your attention. There are just so many areas to be looking at right now that are worth sort of like diving into and getting to understand, because what sits underneath the obvious players, Nvidia, the hyperscalers, the TSMCs, the ASMLs, is a bunch of companies that are essential for producing the thing that these enormous players have an insatiable appetite for. And so guys, that covers it, right? As long as these hyperscalers and maybe even governments are going to continue the need to build out AI, then there's going to be a few companies that are highly beneficial from that, because they're the bottlenecks where this AI build out gets stuck. And if it gets stuck there, then they have enormous pricing power and they're going to basically be sold out. They're going to have enormous earnings and they're going to continue that until those earnings cease, right? Or until those earnings roll over. But as long as these earnings are going on, this is a reason for the market to have fuel to continue to the upside. All right, guys, that covers it. Thank you so much for watching. I really appreciate it. Let me know what you thought of the video. And I shall see you in the next one. Ciao, ciao.